Accounting, a complete step-by-step guide to financial and managerial accounting for beginners, written by Gerald Keynes, narrated by Rudy Norman. Chapter 1. Financial Accounting. Other posts on National Well-Being Accounting, DWBA, have hinted about the new ideas upon which this new national accounting model relies. In this guide, the thoughts and theories are summarized based on the policy in a new publication, Accounting for a Better Life. Accounts. At its simplest, an account is only a listing of transactions relating to an area of financial interest or activity. The most familiar kind of consideration is the bank statement, which clients occasionally receive from their lender. The first important point to appreciate is that accounts are for collecting information about value. We're so used to bank and credit card balances that are all about the currency, which people sometimes don't realize, that scales are equally helpful for collecting transaction details about, by way of instance, our home, our cars, one account for each auto, our investments, etc. The next important thing is to appreciate that there are two different overreaching types of accounts, which we can utilize in our collections of books of accounts. The advantage kind accounts, as its name infers, typically relates to storing transactions for assets like bank accounts, homes, cars, etc. The theory behind this is that the positive amounts entered into the column of an asset account signify increasing value. $500 came to the plus column of an asset account suggests a gain in value of $500. Nevertheless, accountants will also have in their company accounts what I call working accounts for home accounting, as other reports of the advantage type that aren't strictly for an asset like a car or a house. That other general type of accounts is a liability account. It's used for accumulating liability or debts. We have the reverse concept because increasing amounts, for example $300 from the column of those forms of accounts, suggest more obligation or more accountability. At the same time, a reduction of $200 represents less of a debt. You may think more debt means less value, but everything depends on the purpose for which a liability account is used. Again, accountants mostly use liability-type accounts for holding exact debt amounts but need different reports of the accountability type to mediate particular transactions. I refer to these as working balances in home accounting because they don't relate to any certain debts of an individual or household. Examples of them are for collecting temporary information regarding asset acquisitions and growth in the value of a house. Another place for confusion here relates to the titles for column headings used in the various software packages available to support accounting in business. The convention is that debits, the plus column for asset accounts, and the minus pillar for accountability accounts are traditionally at the left-hand column of every account. Together with the credits on the right, the minus pillar of asset accounts and the plus pillar of liability accounts. This convention isn't always adhered to in specific software packages. Together without necessarily using the headings credit and debit. Double entrance and the accounting equation. The final bit of theory to mention that lies in the center of DWBA accounting are so-called dual entrants. First, it's an accounting concept which relates to an approach for taking into account, there is a proper phrase, all the financial elements of some financial thing. All the financial elements of some financial thing. For national accounting, such an entity would often be a person or a household. The point is that the accounts behind one of these things consider or simulate the totality of the financial details of the entity. Therefore, the reports will have the ability to catch and make visible both the dynamic and static characteristics of the entity financing. The practical effect is that the set of double-entry accounts, the novels, requires an account to store the overall financial value of the thing, in addition to usually some considerations for amassing periodic fluctuations concerning increases and declines to this generic price. The result is what is
Sample complete. Ready to continue?